we brought it down 1, 2. Then 600, you know it is good 4 years. So that is a this is a 1/8. So year 3 we have 1/8. Then year 4 1/8. Then profit and loss 600. You see that that is a 2,400. You carry it down here 2,400. Then it was sold in the 5th year. I haven't charged the depreciation. It was sold in the 5th year. So at the end of the day, then year 5, you know, it was disposed. Year 5 should be the time that it is disposed. Then balance PD. You brought that 4,000 here. So then you write year 5 asset disposal. That is 2,400. So that the asset, that is the asset that was disposed. Then after you prepare this, you now prepare profit and loss. Because it is a disposal, you dispose that asset is disposed of, you need to write it up in the 5th year. So profit and loss account. The necessary things you need to write: year 1, the depreciation. Year 1 is 600. Year 2, depreciation 600. Year 3, depreciation 600. Year 4, depreciation 600. Then you know that at the end of the day, we did something here that the profit we have there is 400 that we solved the other time. The profit, because the cost of that asset, the net book value of that asset at the end of the day is 600, and it's been sold off at 1,000 naira. So you have a profit. So here, you know, this in profit and loss, this is the expenses side and this is the profit side. So that profit has to be credited. So profit, you see that we are applying double entry principles here also. So profit, and that profit is 400 naira. So that is how you prepare your profit and loss. You don't need to prepare balance sheet. The reason why being that asset is disposed of at the end of the day. So the next ledger you need to prepare is this. Then the last one is we'll prepare, because you want to prepare the disposal account to know, to check, to see whether surely there is profit in the disposal of that asset. That brings us to asset disposal account. So here, this, what you just do here, what you just need to do here is that we still apply the same thing. What is the cost of that asset from the beginning? Year 1, the cost of that, this is asset disposal account. The cost of that asset is 3,000 naira. the cost of that asset is 3,000 naira. Now, then you now write bank. That means bank means you dispose that asset. How much do we dispose it? When you see the question, it is disposed at the rate of 1,000 naira. So you dispose it. You see that cost, asset cost should be debited, and bank, when you dispose an asset, money comes into your account, so it has to be credited. Now, we now write here provision for depreciation. That means the amount that was being depreciated for good 4 years, and this is it. The provision for depreciation is a 2,400 naira. So, and the provision has to be credited under the double entry principles. Depreciation, and that is the depreciation is a 2,400. So when you add it, that is a 3,400. So now you want to know whether we have profit or loss at the end of the day. So this is the cost. This is the amount that was being sold and depreciation that was charged for the year. So you see that we have a profit on sales, which is 400, and the balance is 3,400. So that is that on the disposal of an asset. Now, another thing is that in the question we are given that it was disposed of for good 1,000 naira. Now, and we have been told that the net book value of that asset is 600 naira, which we've done earlier on. Now, let's assume that at the end of the day, that asset was disposed of for 200 naira. That means what will happen here is that there is loss, because I told you the other time that the net book value for that asset, which is the scrap value, is 600. And let's not assume that it was not disposed of for 1,000. Let's assume that it is disposed for 200 instead of 1,000. What we do is, that means there is a loss of asset. That means loss of profit on the side of the disposal of asset. It is 600 naira and was sold for 200. That means you have a loss of 400. Now, what we now do is that if you are given that question, what we do here, you still prepare the same account, that asset disposal account. It is supposed to say the net book value is 600 and was disposed of 200 now. So we have a loss of 400. Now, the same thing we did here is what we also do here. Bank. How much is being disposed? It's being disposed at the rate of at 200 naira. Now, provision for depreciation still remain 2,400, and the cost of that asset still stand 3,000 naira. Now, then we want to know whether we have a profit or loss, and you see that this one is this side is greater than this, so we have a loss. We have a loss on sales. So this is 26 minus this, so we have a loss of sales of 400. So right, that you balance it 3,000 and 3,000. I'm just giving you the case whereby there is no profit on disposal of asset, that there is loss in the disposal of that asset. So this is how you prepare it. But if it is profit, you prepare it like this. And if it is loss, if in the question you are given loss of this asset that we prepare it, you just come here and write year 5. You come here and write loss of assets, loss of on sales, which is 400. So I'm giving you the instances that if there is loss on sales of an asset, this is how you prepare it. Then you come back to profit and loss and write a loss on sales at the end of the day. But if it is profit, you write it here. So that is that on the sales of asset. And the most of the time they do test your knowledge. They can test the student knowledge on disposal of asset, and that's very important. You need to take note of that. So if you are given this question, this is how you prepare it. Or let me write it this, if you are, because so as not to convince you, if there is loss, you prepare it normal, you prepare necessary ledgers here that like this. Then the only aspect that will change in the loss is the asset and the profit, which are done here. So year 1 depreciation, which is 600. Year 2 depreciation, which is 600. Year 3 depreciation, which is 600. Year 4 depreciation, which is 600. Then you now write you can write year 5 loss on sales, which is 400, which we've done here. So if there is loss in sales of asset, this is how you are going to prepare it at the end of the day. So that is that thing on the depreciation of an asset. Theme 2, we'll be talking about manufacturing and the partnership account. So under it, we have the topic 1, which is the manufacturing account. Manufacturing account form an integral part of the revenue account of the manufacturing organization. It is prepared to ascertain the cost of goods manufactured during the financial year. The total cost of production will be transferred to the trading account. What am I talking